now? Like,
It's a great argument
to do that
in favor of a hereditary monarchy. The only because they're the only people who are like, I have a long-term vision to do the responsible thing. The thing we have is you get 4 years and it's musical chairs. Let's hope that I'm not the one when the music stops. It's central planning without the planning. It's like all they're doing is just craziness. Everyone, welcome back to a new episode of Econ. I'm David Angelo and I'm with Bob Murphy. And, we're talking economics. We're talking finance. A lot of people do it, but we do it in a different way. Right?
Yeah, I think it's educational, entertaining. We try not to lie to people. We might be wrong, but we're not lying.
That's right. And a lot of people, do you think both of us were always suspicious of Paul Krugman. This is beside the topic. Mm-hmm. You think he knew he was lying?
I knew he was being slippery. I think he justified it, now that you're bringing it up, because I think he thought everybody else was doing that, like on the other side. So in his mind, it's like, well, if they're going to do that, then we got to fight fire with fire. But there would be times where he would accuse his opponents of stuff that was clear he was doing it, and I thought it was like psychological projection. And so anyway, right. I think that's how he would get to sleep at night, knowing what he did, because he thought, I got to do this to protect, the working man against these evil people working for Fox News.
Right. It was activism by any means necessary. I always thought it was bizarre. I don't think he gave himself this label, but he was presented as a progressive economist. Mm-hmm. And it's like, there should be no qualifier. Right? I mean, it's like math. You don't have a progressive statistician, right? I mean, how can you?
Yes, you're right. But it's like saying, oh, is that guy a Republican mathematician, or that doesn't even make sense?
Right.
But I think the idea is, he uses his knowledge of economics for the good side of the force kind of thing. Like that's what they mean by it. Like what does he care about? And I think in his view too, because it's funny, if you read his older stuff, like from the 90s, he would go out of his way to like tweak conventional like labor union myths and things like activism and stuff. So I think what happened is once he won the Nobel Prize, he was like, okay, I've gone as far as I can in this lane. Now what can I do? Oh, I want to be loved by, the kids. Like I want to be a hero to them. I want to be like a Noam Chomsky or something. So I again, as we just take the first few minutes of this episode to psychoanalyze some guy we don't know.
Well, that's what we do.
Yeah, that's what we do.
It's just theorizing.
Yeah. In the comments, folks, if you want us to psychoanalyze somebody else, let us know. We may do it.
Anybody. Doesn't even have to be economics related.
Yeah. It could be your uncle. Folks,
yeah,
we need to tell us a little bit about him.
We need a dossier, and then we'll get into it. Okay, today's episode, we're going to talk about the debt, because we are zeroing in on $40 trillion in debt from the federal government? They have all these different slick ways that they slice it, where it's public debt, is this, and
do you want? You want me to take a minute to just
give us the 101.
Because people probably see that, right. So the reason it's been in the news cycle lately, it first came out, like I saw the first story back in April talking about March. And then in July, it was topical again. That's why I did a deep dive and a written piece, folks, for this stuff. And I thought to David, why don't we talk about this? Is that the federal debt held by the public has just surpassed GDP. So the debt's... That number's like 32 trillion. The 40 trillion that Dave is referring to is the gross debt. The difference between those two numbers is there's a bunch of treasury securities held by like the Social Security Trust Fund, that thing. So strictly speaking, when Social Security would take in more money over the years from workers than they paid out in benefits, the government still spent that money, of course, but the treasury like borrowed it from the Social Security Administration. Here's these, IOUs. It's like, Dumb and Dumber. Like, hang on to that you're going to want to keep that. So there's like $2.5 trillion of that. And then there's like a 1 point something trillion in like the military's retirement fund thing. Okay. So in other words, government agencies that have assets that are treasuries, it's like one part of the government owing another part of the government money. They don't count that. So, but that's all in part of that 40 trillion figure you're talking about, David. So the 32 is like entities outside of the government that own treasuries and are legal claims on the treasury. That's about 32 trillion, which is current GDP. So hence, the country would have to produce for a whole year to pay off all of its debt. That's the idea. Right.
Now, I don't want to get too technical out of the gate, but if it's held by the government debt held by the government, as opposed to some Joe on the street with a treasury bond, why isn't that? It should still count as public debt in a way, right? Because here's my theory. If the government is holding a bond, the only way they're going to, like if the Social Security Administration has a bond for $100, they still have to then, they have to sell it eventually. It's almost just like they haven't sold it yet to make it worth anything. So it still has to be eventually sold to someone in the public, right or no?
I'll say some stuff and then tell me if I'm answering your question.
Yeah.
So one way of looking at, if they were just to rip, if the Treasury were just to say to the Social Security Administration, right now we owe you $2.5 trillion, just rip that up.
Yeah.
That wouldn't affect the government as a whole. It still would mean like, hey, we have a problem here because retired beneficiaries are owed more money next year in Social Security checks than workers are going to pay in. How are we going to cover that? And the government would have to like tax the general public but that's not changing anything. That's what's going to happen right now. So right now, the Social Security Administration say, well, we still have this $2.5 trillion trust fund we can draw down on to cover this shortfall. But I think your point is, where's that coming from? That's, the Treasury has to tax people to get the money to pay them off. So that's the sense in which it is a wash in terms of intra-government debt. But what you wouldn't want to do, though, is say, oh, don't worry. Like what happens is sometimes they try to have their cake and eat it, too. That if you're going to say, don't worry, you right-wing worrywarts, and I've seen guys like Krugman, just to mention him by name, saying, oh, they tell you the Social Security's bankrupt and blah, blah, blah. No, they got the trust fund that's in force, and they just got to tweak the benefits, make, postpone retirement, and it's fine. If you're going to do that, then you better be using the $40 trillion figure when you're saying how much is the Treasury on the hook for. So sometimes it's slippery where they try to say the Social Security's got that, and that's a real asset to them. But when they report how much is the Treasury in the hole, they just report the, held by the public figure. So as long as you're consistent, but you're right. What you wouldn't do is say Social Security at least has $2.5 trillion of assets that they can draw on, because again, that's just, where's that coming from? It's not like they own real estate. That just means the Treasury owes them, bond. Which means, that the public owes them. So, right.
Okay.
So, if you're saying, if the way they did it was they sold that off to the public, to some hedge fund to get $100 billion to cover their shortfall, right, now the hedge fund owns the $100 billion, and that would transfer into the public. And so now that would become part of debt held by the public. If that's what you meant,
they have to sell it. Or you're saying they could eventually just rip it up if they have enough revenue?
Or they could just hold it to maturity, and then the Treasury has to give them money. And I'm just saying, well, where's the Treasury get it from? So technically they wouldn't be selling it. They would just be holding it to maturity.
Okay.
But the Treasury, that's what it's saying. The owner of this thing, on if it's a $10,000 thing, whenever you get interest payments along the way, and then when it matures, the Treasury gives you $10,000.
Even if they hold it to maturity, Treasury then has to pay it.
Right. And that comes from tax
no matter
revenue.
how you slice it, them holding it to maturity or selling it to the public, it's going to be a public debt. Right?
Yes.
I mean, it has to be. So they do that figure, which I'm imagining is just I don't know. On the other hand, who cares what the number is at this point? I mean, I remember 15 years ago, I did a show called Economics, which is on my other channel, cult classic. I was like, I can't believe it. The debt is 15 trillion or something. And I thought at the time, I was like, how can this be? This is so much. It's like $50,000 a person or whatever it was. Nothing happened. No one cares. Does anyone ever care? Does this number matter? Why? At what point does it kick in? That's the big question, right?
Yes, it is the big question. And I think it already has kicked in a sense. So should we get into that? Or?
Yeah, go ahead.
So right now, the interest on the debt is over $1 trillion. Okay, so and that's, I mean, in other words, if somehow magically the debt were to disappear, by which I mean if somebody paid it off, not if they just ripped it up and defaulted, but like if whatever, some Saudi prince or somebody had that money and just paid off the debt such that the Treasury no longer owed those $1 trillion interest payments, they could just give that big of a tax cut to everybody, or they could, spend that much more and the government would still be in the same position, or the deficit would be $1 trillion lower. So I'm saying that's real money when we say, and that's more than, it's like 14% of the budget or something right now.
Right.
So 14% of the current budget is just paying interest on the existing stock of that debt.
And it's a low interest rate.
Right. That's partly what happened. Like, how did we get into this hole? Is after the financial crisis of 2008, short-term interest rates, particularly like on government debt or whatever, was basically zero for 7 years. Like the Fed funds rate was 0% for 7 years.
Right.
And then the debt went up. Like the Obama administration had 4 years in a row where the deficit was over $1 trillion. Each of those, that would have been inconceivable. If you remember, like you're saying, under the George W. Bush years, like if the deficit was $300 billion or something, people were freaking out.
Right.
And so Obama had 4 years in a row where it was over $1 trillion. But that didn't hurt that much. It did, like the world didn't seem to end because interest rates were so low, right? So the analogy I use is like you're getting 0% APR introductory offers on credit cards, and you're buying, flat screen TVs and whatever, and cars or something. You can get away with that for a while because the interest cost is so low. Like your debt keeps going up, but it doesn't hurt your lifestyle. But then when the rates reset, then you're dead, and that's what we're having now. The rates are starting to move back up toward just a normal level. It's not even like they're skyrocketing.
But what isn't the rate set by the Federal Reserve can't they just artificially bring the rate back down anyway?
So they can, but the problem is how they would do that. Like when we say, oh, the Fed quote sets rates, right. It's not like a price control. It's not like Mamdani just saying, like we talked about last episode, David, it's not like them just saying you're not allowed to charge above a certain amount, and if we catch anyone doing it, you go to jail. Here, when we say the Fed sets rates, it's because they change how much money they're printing, right? So yes, the Fed can just say, we want it to be that the 3-month T-bill yields 2.2%. And what they can do is they can just create electronically more dollars and go buy T-bills to make sure that yield is what they want it to be.
Right, which is what they did in 2008, basically, right? So that got us out of the pinch. I'm just trying to, I think everyone who's watching this kind of understands that there's a lot of debt. Mm-hmm. And then the questions become, from the left, it's like, who cares? And then from the right, it's like, no, the world is on fire. But at the same time, we've been in this stasis where nothing's really been happening. So the left argument has been better, which is like, it doesn't matter, because it apparently doesn't matter. Now, when you see 30-year bonds selling at, I don't know what the interest rate is, lower than inflation now for 30 years, I have no idea who would buy that bond. Now, maybe the Federal Reserve buys them, but they're not the only people. I mean, there's trillions and trillions of dollars out there. And I don't know what their balance sheet looks like. I should have done some research. But I'm the comedian end of this podcast, okay? So
so you're totally right in everything you've been saying here.
Thank God.
Here's what happened. And also, again, folks, is a bit of humility. This is what I think happened in terms of like the left-right debate. And people are like, oh, come on, you guys are always worried about the debt, and Glenn Beck is freaking people out. Shut up. So after the 2008 crisis, the Obama administration starts, running massive deficits. They had the so-called stimulus package, that stuff. And then that's when the Fed started doing quantitative easing, or QE. And if you looked at their balance sheet, it was crazy. It was like they doubled their balance sheet in like 3 months or something in the fall, like, late 2008. And some people, including me, like I wasn't saying, oh, hyperinflation is going to be Zimbabwe. I wasn't saying that, but I was very concerned we were going to see rising CPI. And that didn't happen. All right. There are tricks the government did this, but I mean, you didn't have $8 a gallon gasoline, right?
Right.
And so I think that discredited the hawks, or made people think, oh, we're in a new normal now. Like, maybe back in the day, according to my textbook, if the Fed just prints a bunch of money, prices will go up, but it didn't happen this time. But you saw that breakdown at COVID. So that's what happened with COVID. The Fed pumped in even more money, like in that first year, in 2020, than they had even in any 12-month stretch after 2008. But they backed off that real fast, because then you did see prices go up. We had the worst, consumer price inflation since the early 80s. So I think what happened was there was this, like a financial crisis. Let me put it this way. Prices would have fallen in the fall of 2008 if the Fed hadn't dumped in a bunch of money. And so I think, in a weird way, you kind of did have inflation, but relative to the counterfactual of doing so. I think that's partly what happened. So again, just going forward to say, Well, I mean, if the interest rates start going high and the government's servicing costs get too much, why doesn't the Fed just say, no, treasuries are only going to yield 1% going forward? They could do that, but they have to print money and buy more of the treasuries, and those extra dollars would push up prices. So you
right.
start.
I want to come back to that because there's a point I want to make on that. But the other part with COVID, if we have a bad economy, you would generally speaking have falling prices, right? Is that the idea? Like there would be in a hard money economy, if there's a recession, you're going to see deflation. Is that fair or not? Not really.
It's subtle. I'm trying to give you a nuanced answer.
Right.
Because suppose you had a healthy economy, but with hard money, right? Like there's just like people are using gold coins, or if everyone's using Bitcoin and it maxes out, oh, there's just 21 million Bitcoins. That's it. Over time, if it's a healthy economy and real GDP is rising at 3% a year, you would expect prices to gently fall year after year.
That's true,
right? Because it's the same money chasing more and more goods and services, so the unit price would tend to come down.
Okay. You're right.
What typically happens, the reason though people think deflation means a bad economy is because, yes, historically, if there's a crash and everybody's panicked, what do? You hoard money, right? And so that's why there is a correlation between, if prices are dropping rapidly, typically that's not a great economy and unemployment might be high. But I'm saying it's, strictly speaking, it's the causality goes the other way around. It's not that.
That makes sense. It's not necessarily linked. Okay, so but it's just in a crash you might have a reaction, because in the point I'm trying to get is maybe when they're talking about we've had record inflation of, let's say, 7 or 8% post-COVID. I don't know what the number was. Let's say it's 9% in 2021 or something like that. Just I'm generalizing.
I think the year over year was around 9. It might even have gotten close to 10 yet.
Now we measure inflation just from an integer, 9%, but it could have been that there would have been deflation. So we're starting at 0, but what in the absence of the money printing, it might have been negative 5%. So the actual inflation, real inflation or whatever, could be 14%, right? Like it's hard to actually measure the inflation unless you know both sides of that. Is what I think I'm trying to say. So you're
exactly
not getting an accurate number.
Right. And so what you just said is what I think happened in the fall of 2008 actually there was one month where the CPI did go down, and then that's when all the boatloads of money came in.
Right.
There was another weird thing.
You could get 20% inflation, but it's only registering as 9% because in the absence of the money printing, it would have been negative 10.
Right.
Is the point. But maybe we're too much inflation. Let's go back to the debt.
Can I just say one last thing on that? Just to make there's a big asterisk. Another major difference though is in 2021, 2022, it wasn't that there was a bad economy in the sense that there was slack demand and businesses were laying off workers and unemployment. It's the government said you have to stay home, right? There was the lockdown.
Right.
And so that's, if you think about it, like that would artificially restrict supply. Then where supply gets artificially, because there's fewer goods and services flowing out, into the marketplace.
Right.
And on top of that, you dump in a huge boatload of money, that's going to make prices go up. Whereas if you have a conventional bad economy where just, the demand is lacking and businesses are laying off workers, that's where you could see like, you'd expect prices to go down, like is the baseline, and then if they dump money, maybe just keeps them relatively flat. Whereas I'm saying with COVID,
right,
the reason quote the economy was bad was because people weren't producing, they weren't going to work because they were either afraid or because the government ordered them to stay home. So that was like two whammies that are going to make prices go up.
Right. Okay. So back to the debt. That makes sense. Back to the debt. I remember every time you turn on the news as a kid when it was Dan Rather, Peter Jennings, and the like. They were all upset about the debt. Everyone's been upset about the debt for so long. And if you go back to, at any point in history, they've been upset about the debt. And its magnitude's larger. This is the thing where it has to be, what is the actual mechanism that will make this matter? Is it just the people stop buying the treasury bills, the public? Is that the only way that it works?
Yeah, great question. And you're right. And that's why I do understand like people sort of get debt fatigue, and then like Rand Paul on Twitter complains about the debt, and even like people on my side of this stuff, like even like staunch libertarian types,
right?
Like Rand, nobody cares about that. Talk about,
well, they have
Iran or something. And so
It's not that nobody cares. The people buying it don't care.
Yeah. So there's two things. To answer. So one thing is, like I say, right now, like I want to disabuse people of the idea that, it's this looming thing that someday might affect. It affects us right now, just like if you're a household,
right,
and you keep buying stuff on your credit card, like that matters. It's not just at some point it might, like, no, it means, now we have higher finance charges and whatever. So that's true right now. But what you're getting at, David, is in terms of what would turn it into an actual catastrophe or crisis would be, yes, as this goes on. And the major ratings agencies like S&P and Moody's and Fitch and so forth, they don't have the highest rating for U.S. Treasury debt anymore. They used to. And over the years, each of them has, taken a nick and tuck here and there to downgrade it a little bit. And so, yes, what could happen is eventually, as more and more creditors start saying, are they, either worried about a default or worried the Fed is just going to inflate this away. And so the dollars we're going to get paid back in are going to be less. And so they're going to insist on a higher yield to compensate for either the risk of default or we're getting paid back in weaker dollars than we're lending them in the first place. So a combination of those two things, you could have a runaway cycle where the yield for the Treasury to issue more debt next year, partly just to pay the interest on the previous debt, they got to pay a higher price. And then that could lead to a vicious downward spiral.
Okay, so if you're the government, you're given Roman emperor powers tomorrow. You can't pay this debt down. So that's the thing. You actually can't pay it. So the only solution is to inflate it away, right? So if I owe $30 trillion, my only real solution is to print $30 trillion, pay it, and then just have twice as, all this extra money flying around. And maybe all of our prices are 10 times as high, but now the government has no debt. Is that the plan? I mean, how else can they possibly do it? What else could be done?
So in terms of like political feasibility, yes, I think that's one thing. I mean, I have written up plans and things like when I thought, Massey or somebody might go and like talking to people. Yeah. You could like.
It's funny in other words, you still be idealistic about anything.
Right. And partly I just did it as an intellectual exercise just to show if somebody actually wanted to do it here, you could do it. And it would involve, massive cuts, but not just saying like everything goes to zero tomorrow. I mean, but like, plausible, like there's no reason the military budget needs to be as big, just look at stuff and say, if we just went back, to 2008 levels of spending, this would happen. But another thing is the government is sitting on a lot of assets. Like they own a bunch of offshore things. And so they could sell off a bunch of assets to partly cover that. So that is one way they could do it. But politically, that's not going to happen. I think it's going to take a crisis. And so you're right, David. Realistically, I think it's going to be a mix of
hyperinflation.
They're going to print, have the Fed monetize it.
It's the only possible way. If you have to pay the interest and it's short-term debt, and then they have to repay the principal when those become due, or just resell more bonds or whatever, but at higher interest rates, the only possible way is to print the money. There is no other. They're not going to do taxes, and that's the only other way to get income. Or you're selling off assets, but that's not going to do it either. I don't know that they have $30 trillion in assets, and people aren't going to stand for it. They had a revolution over the USAID thing practically. That was like $2 billion. They were like in the streets rioting, so they're not going to cut anything. I sometimes think it's easier just to have society collapse than to explain like the basics of this financial situation to anybody.
Right. So if you're asking me to predict, so like all I'm doing is saying theoretically, yes, they could at this point still turn this ship around before it hits the iceberg, but I don't think they're gonna. Right. I think it's gonna be because also too it's politically painful. Like if there was an emperor in charge and he had 30 years to do something and then he's going to hand it over to his son, maybe they would do it. But right now, if any group is just in power for 4 years or even 2, if you're talking Congress, why would you impose all sorts of pain just to make things better 10 years from now? Like,
it's a great argument to do that in favor of a hereditary monarchy. That's the only because they're the only people who are like, I have a long-term vision to do the responsible thing. The thing we have is you get 4 years and it's musical chairs. Let's hope that I'm not the one when the music stops, and let's be as crazy as possible. And so, there's like
an economist, I know Hans Hoppe has written on that stuff. So the point isn't to say monarchy is cool. It's just to say, why do you think democracy is so good? The real issue is like the government shouldn't be this powerful. But given that you're going to have this crazy institution that can do all this stuff, yeah, you want to have the incentives of the people in charge not be that they have a 4-year time horizon.
Right, but it's always going to end up this big. If you started from zero again, if you have an entire crash, you'd go full Cuba, full communist, start at zero, whatever, or there's an anarchy, it's Mad Max, zero. As soon as you have a democracy again, the people get elected by promising to spend money. I mean, that's it. That's the way that biological entity called a politician survives in the wild, is to promise to spend money. So it will always just inflate. So now you have, I think the thing, we always talk about business cycles and stuff. We'll have democracy cycles. How long? It's been 200 years to get to wherever we are when this thing implodes. Then we go back to zero, see how long it can last again. But I don't see how it's solvable. One way to prolong it, and this is my theory, this is conspiratorial sounding, but we've talked about this. When I talk about the petrodollar, right? The only way you can export the inflation a little bit is by having the money all over the world instead of just bouncing around in America, right? So this idea that America needs the world using the dollar helps stabilize prices here. Is that true?
Yes, definitely.
Right.
And so, right, like that was, so with the so-called Bretton Woods system that they, put in place after World War II, where it was like a gold exchange standard where everyone around the world was encouraged to hold like U.S. treasuries as their reserve asset, and the U.S. authorities said, "Don't worry, that's as good as gold. That mere citizens, they can't come to us and turn dollars in for gold, but you central banks you can." And so that was it. And it was at $35 an ounce, and that was the deal. And yes, so that what ended up happening under that system is, if the U.S., loosely speaking, would print money and send that abroad, and if other people around the world are just willing to stockpile dollars as like the base of their own monetary system, then the U.S. doesn't have to, send them goodies in return, right? So foreigners around the world are making cars and sweaters and TVs, sending it to Americans in exchange for $100 bills. And then you say, okay, but after a while, doesn't that make the dollar crash? Well, not if the foreigners around the world are stockpiling the $100 bills as the backstop for their own currencies. Right. I'm being it like it's treasury. It's not dollar bills, but I'm being intuitive. But that's the idea. And so, and that was a famous thing. Like economists at the time were referred to as deficits without tiers, like a sort of saying this is kind of a rigged game you Americans have set up here with your military hegemony after the war.
Well, that's the thing. So you have the petrodollar. Oil is sold, or is it priced? Well, either way, it's sold in dollars. Oil. No matter, so if you're Japan and you're buying oil from Saudi Arabia, you got to pay in dollars. Is that the idea? Yeah.
So that Bretton Woods system I talked about, it started to strain in the 60s because the U.S. was printing too many dollars, right? And so like the French government, de Gaulle famously said, okay, well, the deal was you said we should hold treasuries and we could turn them in for gold. So yeah, give us the gold, please. And then the U.S. officials realized, if too many people do that, we don't have enough gold, because they've been printing too much money for the Vietnam War, war on poverty, and so on. Right. So that's why Nixon in 1971, said, okay, after talking to my advisors, we're going to temporarily de-link, and then it was permanent. And so then, yes, in the 1970s, as a replacement for that, like how are we going to ensure the globe still demands dollars? They set up the petrodollar system, right, where like they would provide military aid and protection to Saudi Arabia in exchange for them not only selling, pricing their exports in dollars, but also using the proceeds to go buy treasuries. Like, I think that's a part of the leg people often don't talk about. If they just priced it, it might be the bit of a demand, but the real thing was then their earnings, they would just have them sitting in treasuries. So that bolstered demand.
It's like a sponge. It's holding these dollars from our consumer prices.
Right.
And so then that's why the United States let Saudi Arabia walk on water. Remember, they can do whatever they want. And then anytime a government doesn't do the petrodollar thing, our notable examples are Iraq under Saddam Hussein, Libya under Gaddafi, Venezuela under, who was the guy before Maduro? I don't even remember.
Chavez?
Yeah, I hate when I put that. Sometimes if I put a hand signal up, the computer will recognize it as a thing that it's.
Yeah.
You cannot disable it.
Yeah, the people watching, who not seeing the video, that a bunch of balloons went up on David's, and I thought he had it, that anytime someone says Chavez, you just celebrate.
It should.
The rest of the soul.
No, that should be part of it. But when they try to sell oil in other currencies, it always leads to military conflict. And then Iran recently.
Yeah, and I've even heard, David, I was listening, this is funny you went down this path, because I was listening to Luke Groman. I don't know if he's on your radar. He's a good financial analyst. And he was even saying some of the stuff like the guy Dominique, I forget his last name, he was at the IMF. He was caught in a sex scandal and stuff. And apparently 3 months before that happened, he had proposed diversifying and having like IMF, like SDRs backed by gold and stuff. So again, it's powerful men are tempted
sounds
by
like
things,
a conspiracy theory.
It does seem there's lots of examples of people suggesting getting gold back into the situation and not just being the fiat dollars, and then bad things happen to them.
Right. And then that's like the, I'm like, am I conspiracy theorist for saying this? But it's like, apparently the people in the government, in the United States government, believe this because it does line up. And, they want to talk about, remember Saddam, it was about 9/11 the second time around.
Right.
But they came out of Saudi Arabia, those guys. But that country walks on water because they play by the rules. Mm-hmm. So everything about foreign policy in the United States lines up with that theory that it's just enforcing dollar hegemony to keep consumer prices in check. The other thing is all these asset prices, which we should do another episode on that. I want to stick on the debt. The one thing is like when you talk about it to an ordinary person, you might just say, why don't you just say we're not paying it, just evaporate. But isn't the problem with that the entire dollar is based on these treasury bonds? So if you set them to zero and there's no more value to them, then what would a dollar be worth? I mean, aside from the whole defaulting and bankruptcy part, it brings down also the entire currency.
For sure, if the U.S. Treasury just announced even a partial haircut, it would cause massive panic. And if they just said, you know what, we're just not paying. This is crazy. Sorry, you shouldn't have lent to us. Yeah, I mean, the global financial system would probably crash. And certainly you would see prices rise in the U.S. because, again, that like part of the model right now is printing money, and that goes abroad, and then people send us goodies. And so, yeah, if that unwinds, then all of a sudden, yes, we're on our own merits, and the cheap, like cheap goods from China wouldn't be cheap anymore if the dollar crashes against the yuan. And partly what keeps the exchange rate where it is, would be if they wanted to keep adding to treasuries, they would have to use their currency to buy dollars to then buy the treasuries with. So if everyone around the world says, we don't want it, or even going worse, the other way, if they tried to sell, then yeah, that would make the dollar crash against all those currencies, and then
right, because the dollar is backed by treasuries. Isn't that the only asset the Fed holds, or no? Mostly.
Okay, so that's a good point. Yeah, they own treasuries and mortgage-backed securities primarily, and they've been winding down.
But the mortgage-backed securities are priced in dollars. I mean, the value of those contracts are based on repayment in dollars.
Right.
So it's a little self-referential. The only actual asset is this government debt. So they have to keep paying it. Then the second one, which we brushed on a little earlier, why don't they just do the $1 trillion coin? Why don't they just say, here it is, we're going 10x on the dollars. So instead of, it's going to become like, remember the lira, when it was just like, you lose track of how many or the yen. They're just going to say, instead of George Washington on the $1 bill, it's going to say 100. We're going to add 2 zeros to everything. Doesn't that actually solve? Now, the people who were holding debt, they love that because all their debts are raised. The government is also, all their debts are raised. Who gets hurt on a situation like that other than the consumer now, or someone who has no assets? who they're getting screwed anyway. So what's the difference? Why don't they just do that?
Okay, so I guess at one level, because you brought the $1 trillion coin, those are separate things, right?
They are?
Yeah.
Well, I'm just saying inflate your debt away.
Okay, so there's a difference between that and versus like redefine what a dollar is. So
right.
To just like do the $1 trillion coin, right? The idea for folks for context, back when they were having the debates over the raising the debt ceiling, somebody came up with the idea. They looked and there was something where it was for like commemorative coins to celebrate whatever it was, the 200th anniversary or something, or 175th at the time, I guess, anniversary. And so the mint was allowed to mint platinum coins. And then they said, well, why don't we just put $1 trillion on it, right? And the people who made that rule, that's not at all what they had in mind, but okay. Right. So the idea is, why doesn't Congress or the executive just do that, and then they can just give it to the Fed and say, this is worth $1 trillion, it's lawful money, credit it to our account. So if they did that, whether it's legal or not, that's just the Treasury creating, or the Fed creating $1 trillion and giving it to the government to spend. Okay, so that's going to just raise prices. Okay,
right.
Then so they could do that, and we're kind of just, back to where we were before. They could just print up $32 trillion and just buy all the debt and just rip it up and say, good, we're fine.
Right.
And they could handle it that way, but now there's $32 trillion floating around. That's going to push up prices. So that's one way of doing it. A different way that I thought you were getting it is you could just say from now on, every dollar you had is actually $10. And as long as they just redid that for everything, it would kind of be a wash. And so you wouldn't really get ahead. The only way to really get ahead would be if the debts were still what they old were, and now you just change the dollar to $10. Yeah. Right. So if you do that, that's screwing the debt holders, because now, they're getting paid back, but now
it's screwing the debt holders, but the debt, the lenders, it's screwing the lenders.
Right.
The people, the debtors they're
right. The debt owers. Yeah. Yeah.
But because most of America is in debt, here's what I'm getting at.
Yep.
They're going to say the argument is the only way out of 40 trillion anyway is some slow bleed of inflation over the next whatever, until hoping with fingers crossed that there's no calamity that sends the entire thing into a tailspin, right? That's best case scenario, right? Why don't they just say, you know what, we're printing out, we're getting platinum or a new metal, plutonium, right? They're going to be $1 trillion each. We're going to print out, stamp 50 of them. They might as well have some extra lying around, The people who are lenders may get screwed, but those people are usually also debtors. So, and most Americans, if we're going by the democracy way, they would be pro that, right? Because they're in debt. So all their debts get erased, basically, because now suddenly there's all this money flying around, and if you have to pay back $1,000 loan, but you're making now $10,000 an hour at Burger King, these things are no longer a big deal. So all your debts are gone. What is the political downside to that? I mean, doesn't that seem like, if Mamdani, why wouldn't they do that? What could go wrong with that?
Okay, great. Now that I get where you're coming from. Yeah, they could do that. And so one thing is, it wouldn't just be like billionaires getting hurt. It would be like upper middle class, like a lot of people, their retirement funds and their 401ks or whatever.
I'm okay hurting them.
There's portfolio, they're like, I got this Vanguard Treasury fund or whatever. So they all gets hit.
They had a good run. Yep. They got us here. They got us here. Remember that.
So
they got us here.
Okay, fair enough. Just explaining. So there would be, it wouldn't just be a handful of multimillionaires who would be upset by that. So there is that political, and then also those, the wealthy have a lot of political power, right? So they, behind the scenes, if they funded everyone's campaign, those are the same people that would be hurt, and they would say, no, you're not doing that. But supposing, like you say, it's a populist thing and people are mad, they could do that, just like, Chavez could, they could nationalize companies and things too, right? So that socialists do take power. And so, that would be a reasonable thing for them to do from their perspective. And I guess the answer, if you're saying, so, is it a good thing? Does it help more people than it hurts? I mean, it would be kind of like just saying, well, why don't they just take all the companies and break them up and hand them out to people? Like it might be politically popular, but I think that kind of undercuts the ability of the system to go forward. If I had to do a radical solution, I have seen plenty of libertarian economists say they should just default, and that would be painful, but it would also teach the world a lesson, like don't lend to the government again. And like that's actually probably a good thing if you don't want the government to be as powerful. So right. I guess I would say if effectively they're going to screw over the bondholders anyway, rather than just printing it up, which that's more of like it causes lots of collateral damage. I would instead just say just default and like isolate, really just make sure, you know who's getting screwed by this move? People holding treasuries, as opposed to printing up a bunch of money, which causes all kinds of screwy price signals and things.
Yeah, but it would even out. I mean, those are kind of the same thing. If you default in a traditional sense, we're not going to pay it, versus we're going to pay it, but we've just created all the money out of thin air, so now it's basically worthless to you while we repay it.
Well, it's not literally identical though. Like, so if they print up the money and give it to people, at least they're getting nominally the money. Right. And now it's just prices in general.
And the so contract is satisfied.
Right. But some people are hurt. Like if you just owed, if you were like someone just getting a fixed pension from your company, you're retired, and it's just a fixed dollar amount that they owe you every year because you worked there for 30 years, you're getting screwed too, even though you might not have owned treasuries, right? If they do the inflation route. Whereas if they just say, anyone holding treasury right now, rip it up, we're not paying you, you've really contained it to those people are the ones directly bearing 100% of the pain. So that would be the difference. If they print it up, the pain is spread around among all people owed dollar payments, even if they're not treasury assets.
Right. I mean, I feel like we're missing a thing here, because Zimbabwe would print up money and it didn't go well. So it's not like it is a solution.
I mean, there is that element too, that it wouldn't be a one-off thing. Like if they printed it to get through this one, then they would say, well, why don't we just print it up to build some bridges and send kids to school and do that, and they would just keep doing it. And
right. Well, there's an element of it where I'm like, when you look back to 2008 or 9, they got in trouble because it was predatory lending. It was like, you shouldn't be lending to these home buyers. They didn't have the ability to repay. Right. And now in my head, I'm like, you shouldn't be lending to the U.S. government. They don't have the ability to repay. So if you get screwed, you are a predatory lender of the United States government if you're buying treasuries. That's how I'm viewing it right now.
Right, and that's the logic of the libertarian economists saying default. That, like, morally speaking, if they have to choose between paying Social Security versus interest on the debt, the idea is the Social Security people, they had no choice. They had a gun to their head and said, out of your paycheck, you're, quote, funding your retirement with us. Whereas people voluntarily lend their money. No one's forcing you to buy treasuries. You do that voluntarily. So if something's got to give, the argument is, from a moral or ethical standpoint, cut back on the people who are owed interest on money they voluntarily handed over.
Right, which is what that should be done. I agree that's probably the better way to go forward, but that would never happen politically, because it's like the media would freak out about it. Everything would be a freak out. There'd be freak. Whereas if you just say, all right, we're doing plutonium $1 trillion coins. If you're in debt, amazing, congrats. If you're someone who owes, or someone owes you money, well, you're kind of screwed. But generally speaking, you're probably a more well-off individual anyway, and someone who may be, the higher the magnitude of your loss, you're probably someone who was involved in being an architect of this current disaster in the first place. So maybe there's an element of that you need to be accepting as the consequences of these actions. But I don't know how else they do it. And it doesn't seem like the right move. It seems very wrong. It seems wrong and fake to do it that way, because you'll have so much inflation. The people who will get screwed are people who have no debt and no assets. I mean, then they're just adrift in the middle of nowhere. You don't get any benefit from anything. You have no debt erased, and then you have no asset inflation.
Right. And I think also, too, a group that could be get crushed under that scenario would be like retired people who are just not just getting fixed pensions from their job, even like Social Security benefits. If that doesn't really track with increases in the cost of living, or even if there's just a lag, they're going to get crushed too. Like if prices double and their Social Security check doesn't immediately double, they're in
Right.
trouble.
Which it really can't, because the idea would be to eliminate the debt. So you can't have suddenly more payments going out.
Right. So for all those reasons, yeah, I think the honest way and just like with a corporation, if a corporation gets into trouble and they're in debt, and it's like, geez, there's a bunch of bondholders out there and we can't make next quarter's interest payment, you restructure. They're not allowed to print money to pay them off. It's like, no, you screwed up, and the people who bear the brunt of that are the ones who lent you money, and they're sitting on your bad debt, and they're the ones that bear the brunt. Other people who had nothing to do with that don't get hurt by that. So that'd be the way I would say that this should be handled as well.
I think it's really frustrating because you talk about like price signal manipulation, but like I feel like so much of what we're doing anyway is just trying to structure our financial lives around the potential political decisions of these random lunatics, and I keep thinking it seems irresponsible to buy a house at the current prices, but I'm also like, they can't go down.
Right.
How can the prices go down? They're only doing inflation. So
yeah, especially if you get like a 30-year fixed mortgage, and you're like, how could it possibly be that my payment is going to be the same in real terms in 10 years than it is now?
It's impossible. So then you think, okay, well, maybe I should just be doing that. And then there are people who they roll the dice and they say, all right, great, I'm buying 40 properties because they're able to profit on this skewed financial system that on its core is manipulated, because the value of the dollar, the debt, all this stuff. I mean, there's nothing remotely free market here. So we're already in communism, or whatever you want to call it, whatever. Yeah. It's central planning without the planning. It's like all they're doing is just craziness.
And notice how what we just said ties into, I think, the last episode about you're complaining about how hard it is to buy a house and stuff. I think that, in other words, it's not that you and I just stumbled on some great strategy. Like, people in real estate know that. And that's partly why. So what would stop that? How come everyone wouldn't just keep doing that forever? Well, because the price gets bid up so high that it's like, well, yeah, it is a good deal, but I mean, the price is so high right now for real estate that even with all these advantages and the fact that I'm going to get in and have a fixed payment and the dollar's going to go down, at some point, the price doesn't go to infinity. So that's partly what's going on and why young couples can't buy a house now, precisely for all these reasons we're talking about. Right.
I mean, maybe it can keep going up, but other things will go up more, and in that way the price falls. But it's very it's just a confusing way to have to make a financial decision, because it's based on there's no principles at play.
Right. And that's one of the reasons I'm such a fan of the old school hard money, classical gold standard kind of approach, where the money is supposed to be like just a way to measure things, as it were.
Right.
And you're not, this is a bit of abusive terminology or whatever, but it doesn't help you any if you're sick and you put an ice cube on the thermometer. You know what I mean? So it's kind of like just printing money clearly doesn't give us more farmland or give workers more skills or things. So there's a sense in which people have to realize printing up more dollars doesn't make us wealthier. And so why don't you just be honest about it and have there be, the money does what it does and it helps coordinate, and that's what it is. And it kind of keeps everything honest.
Right. It might not make us wealthier, but it might destroy those people who are the lenders. But you need fear. They have no fear anymore. That's why the whole thing is screwed up. Mm-hmm. There's no fear of any consequence. So they just, every investment is winning. You go to the stock market, sky high, because that's also soaking up inflation. Every asset, houses, stocks,
and they famously in the financial sector had a thing that they called the Greenspan put,
right?
Which was that they knew in the late 80s, in the 90s too, looking at his behavior, that anytime the markets got in trouble, they thought, no, Greenspan's going to open up the spigots,
right?
And so, like you're saying, no fear, just piling in. There was people in the midst of the housing bubble who were, more and more people like, this is getting kind of crazy, but they kind of thought the Fed's not going to let the whole system go down, and so that's partly why people went along with what everyone kind of knew was nuts.
We need more fear in life. I think we can close on that. I mean, that's...
Yep. This is a very depressing but sobering and helpful episode for people, I think.
I think so. We lined out what the issues are, how insane the possible solutions could be. And I know that there's more downsides to just printing $50 trillion. Leave it with the comments. Let us know what you think would be we left a little opening for you, see, for a little participation. And also let us know what topics you want us to hit on the next or future episodes, because we're here for the long haul, guys. I mean, we're going to solve these problems. Finally, they talked about for generations. Now we're going to solve them.
We're going to be around longer than the U.S. dollar. So
I think that's true. Unfortunately, I got it all in. I got all my money in euros. The Greek sandwich meat. All right, do you hear that noise? That's the construction that just started. It gave us. That's what I'm living in. So we had a brief window.
It's like the outro music when
just a drill. That's what I'm. If you understand why I look a little haggard, it's just this 24 hours a day. Except I had a brief respite. Okay, well, I'll see y'all later. Thank you, Bob, and I'll see y'all next time.